Hi! As a review, this chapter 10 is about auditing the expenditure cycle. And here, the previous reporters have discussed the two procedures using batch processing technology, the purchases and the cash disbursement procedures. And now, the topic that we're going to discuss is related to these two. What is the topic? Reengineering the purchases and cash disbursement system. But first, let us define the word reengineering. Me, personally, when I hear the word reengineering, what comes to my mind is something like redesign, renew, or reorganize. So, in this topic, there is a thing called reengineering the two systems, the purchases and the cash disbursement system. But what is the importance of reengineering these two? Of course, to improve something, because there are instances that these two systems have problems that may affect the entity itself. So, they do reengineering to solve the problems regarding to any of these two. One issue that reengineering can solve is about producing considerable savings. Isang example na lang nito, yung Ford Motor Company. Meron silang more than 500 clerks na employed sa kanilang North American Accounts Payable Department. With the use of analysis, ipinakita rito na large part ng oras ng kanilang clerks ay dine-devote nila sa pag-reconcile ng mga discrepancies between suppliers' invoice, receiving reports, and purchases orders. So imagine, umabot ng 500 clerks yung hinahire nila, and even though marami na sila, most of their time ay nako-consume nila sa pag-reconcile ng mga discrepancies. Yun yung problema nila, yung napaka-time consuming ng part na yun, so that the Ford company needs to hire more clerks. So, yung first step na ginawa ng Ford company to solve this problem was to bring about fundamental changes in the business environment. Yung Ford, nag-initiate sila ng trading partner agreements with their supplier kung saan nag-agree sila ng advanced terms ng trade such as price, quantities to be shipped, discounts, and lead times. With these sources of discrepancy eliminated, na-re-engineer ng Ford yung kanilang workflow para ma-take advantage nila yung new environment. So, that is an example of re-engineering.
Let us take a look here in figure 10.3, which shows the key features of a re-engineered system. In receiving department, when the goods arrive, the receiving clerk assesses the open purchase order file in real time by entering the purchase order number taken from the packaging slip. This receiving screen prompts the clerk to enter the item, quantities received for each item, quantity order, as well as the discrepancy on the purchase order. Quantities of items received are matched against the open purchase order record. A record is added to the receiving report file. The inventory subsidiary records are updated to reflect the receipt of the inventory. Next, the general ledger inventory control account is updated. Then, the record is removed from the open purchase order file and added to the open accounts payable file, and a due date for payment is established. While here in data processing, the inventory file is searched for items that have fallen to the reorder point. A record is entered in the purchase requisition file for each item to be replenished. Next, vendor mailing information is retrieved from the valid vendor file. Purchase orders are prepared and sent to the vendor. A record of each transaction is added to the open purchase order file. And lastly, a transaction listing of purchase orders is sent to the purchasing department for review.
Each day, the due date fields of the accounts payable records are checked for items due to be paid. So, here are the procedures that are need to be performed. First, checks must be printed, signed, and distributed to the mailroom because it will be mailed to the vendors. Second, payments will be recorded in the clerk register file. Third, those items that are paid are transferred from open accounts payable file to the closed one. Fourth, the general ledger accounts payable and cash disbursements are updated. And lastly, The reports detailing these transactions will be transmitted via terminal to the accounts payable and cash disbursements departments for management review and filing. So, balik ulit tayo dito sa problema ng Ford Motor Company kung saan nire-engineer nila ang kanilang workflow by having an advanced terms of trade in order to solve the problem related to their system. So, since yung financial information related to their purchases is known in advance from the trading partner agreement, the vendor's invoice provides no critical information that cannot be derived from the receiving report. And by re-engineering their workflow, na-eliminate ng Ford Company yung task ng mga clerks about reconciling vendor invoices with the supporting documents for the majority of purchase transactions. And as a result, na-reduce ng Ford Company yung kanilang accounts payable staff from 500 to 125. When it comes to the control implications, the technology control issues are general in nature. The points made in the last chapter apply to the expenditure cycle also. Therefore, we should examine only specific issues related to this cycle. So, the next reporters will discuss the difference between an automated versus a re-engineered system.
The automated batch system and the re-engineered system. The most significant benefit of an automated batch system is its increased inventory management capabilities. Inventory requirements are noticed and processed automatically as they emerge. As a result, there's less of a likelihood of having too much inventory or running out of stock. However, a program error or faulty inventory can result in an out-of-date inventory and a severe shortage of supplies. It's critical to keep an eye on it and supervise decisions. Second, this system also encourages effective cash management by scanning vouchers on a daily basis for due items, preventing early payments and missing deadlines. Furthermore, by creating checks automatically, the firm saves money on personnel, decreases processing time, and improves accuracy. If an error is found, the record is assumed to be invalid and is sent to an error file for examination by the management. One possible risk in this system is that the cash disbursements are manually signed by a manager, but to mitigate the risk, a materiality threshold for check writing is established. Third, between the arrival of goods in the receiving department and the recording of inventory receipts in the inventory file, there is always a time lag. This system helps in the prevention of sales losses. Fourth, in batch system, purchasing departments are directly involved with all purchase decisions. This creates additional factor in time lag ordering process. To avoid this situation, automated systems free purchasing agents from routine works. We all know that all operation departments create endless documents. Through this system, organizations with high volume of transactions benefit considerably from eliminating paper documents in their system. Another system is called the re-engineered system. This method rectifies a number of flaws in the batch system. It uses real-time procedures and direct access files to reduce recording time lags, remove regular manual procedures, and reduces paper documents significantly by employing electronic interactions between departments and storing records and direct access media. Do you know that computer programs in the re-engineered system authorize and process purchase orders, as well as issues checks to vendors? They must provide management with a full transaction listing and summary reports to compensate for this exposure. Lastly, this system maintains accounting records exclusively on a magnetic disk. To preserve integrity, limited access is given and software techniques are commonly used. But keep in mind that benefit must exceed the cost.
The payroll processing is actually a special expenditure system. Why? Because even though payroll checks could be processed through the regular accounts payable and cash disbursement system, it has a number of drawbacks. That's why it is processed separately. For you to understand it better, let's discuss them in detail. First, the general expenditure procedures that apply to all vendors will not apply to employees. Payroll procedures are more complicated than the general procedures, as payroll procedures differ greatly among classes of employees and require special accounting procedures for the employee deductions and withholding of taxes. Second, writing checks to employees requires special controls. When payroll checks are combined with trade account checks, it is easier to conceal payroll fraud. And third, general expenditure procedures are designed to accommodate a relatively smooth flow of transactions, and unlike general expenditure procedures which are continuous and designed to deal adequately with their normal level of transaction activity for constantly purchasing inventories and disbursement of funds, payroll expenditures are discrete. Disbursing funds only occurs weekly, monthly, or other predefined interval. To periodically impose this processing burden on the general system, it may have an overwhelming peak load effect. The strengths and weaknesses of this system are similar to those in the batch system for general expenditure procedures discussed earlier, promoting accounting accuracy and reducing check writing errors. Moderate size and large organizations integrate payroll processing within their Human Resource Management System or HRM system. The HRM system captures and processes a wide range of personal-related data including employee benefits, labor resource planning, employee relations, employee skills, personal actions, as well as payroll. The HRM system must support real-time access to personnel files for purposes of direct inquiries and recording changes in employee status as they occur. The differences of this system as compared to the simple automated system are: first, operation departments transmit transaction to data processing via terminals. Second, direct access files are used for data storage. And third, many processes are now performed in real time. We discussed the key operating features of this system as follows. So let's have this figure for visualization. The personnel department makes changes to the employee file in real time via terminals. The cost accounting department enters job cost data, real time or daily, to create the labor usage file. Upon receipt of the approved time cards from the supervisor at the end of the week, the timekeeping department creates the current attendance file. And at the end of the work period, the following tasks are performed in a batch process. Labor costs are distributed to various work-in-process overhead and expense accounts. An online labor distribution summary file is created and copies of the file go to the cost accounting and general ledger departments. An online payroll register is created from the attendance file and the employee file, and copies of the files go to the accounts payable and cash disbursement departments. The employee records file is updated. Payroll checks are prepared and signed, and they are sent to the treasurer for review and reconciliation with the payroll register. The paychecks are then distributed to the employees. The disbursement voucher file is updated and a check is prepared for the funds transfer to the payroll impressed account. The check and a hard copy of the disbursement voucher go to the cash disbursement, and one copy of the voucher goes to the general ledger department, and the final copy goes to the accounts payable. At the end of the processing, the system retrieves the labor distribution summary file and the disbursements voucher file and updates the general ledger file.
Let's now move on to the next topic, which is all about substantive testing of expenditure cycle accounts. Having an assessment of inherent risk, control risk, considerations to materiality, and also the need to conduct the audit in an efficient manner will enable the auditor to determine the nature, timing, and extent of substantive testing. So what are the risk and audit concerns in the expenditure cycle? With regards to the expenditure cycle, external auditors are concerned primarily with the potential for understatement of liabilities and related expenses. Reported balances usually consist of items that have been reviewed, validated, and acknowledged by the management. Attempts to improve financial statement presentation may involve actions to suppress the recognition and reporting of valid liabilities related to the period under review. Substantive tests of expenditure cycle accounts are therefore directed toward gathering evidences of understatement and omission of material items. One audit concern here is companies tend to present that they have good working capital or debt over equity ratio, but in fact, they are not in good condition. Isa ito sa mga areas na dapat bigyan ng atensyon ng auditor because of the intention of the management to present it in the best condition. On the other hand, broader operational audit concerns include process efficiency, fraud, and losses due to errors. Within this context, overstatement of liabilities and related expenses are also important. This is also a key audit concern as this would also affect the net income and equity of the company. In resolving these concerns, the auditor will seek evidences by performing a combination of tests of internal controls and conducting substantive tests. To really understand the systems and controls that produce data as well as the physical characteristics of files of the company, auditors do an analysis by extracting data from accounting files of the company. Before we proceed to the steps of understanding the data, we need to review a few salient points regarding file preparation and take note only that the discussion that follows presumes the auditor is using ACL for performing the audit test. So first thing to remember, the auditor must verify that he or she is working with the correct version of the file to be analyzed. Auditors should work with the original as much as possible, and he must understand the process of file backup procedures. Second, ACL can read most sequential files and relational database tables directly, but the complex file structures may require flattening before they can be analyzed. Kailangan kasi ng additional procedures and special programs in order to produce a copy of original file sa format na ina-accept lang ng ACL. Remember that the auditor must verify that the correct version of the original file was used by the personnel performing flattening process and that all relevant records from the original were transferred to the copy for analysis. Let's take a glance at figure 10.7, which is file structure for the expenditure cycle. First is the inventory file, and it contains quantity, price, supplier, and warehouse location data for each item of the product inventory. The purchasing process begins with a review of the inventory records to identify inventory items that need to be ordered. It involves replenishing the finished goods inventory or raw materials. In either case, when inventory items are sold or used in the production, the quantity on hand field is reduced accordingly by a computer application. With each inventory reduction, the system tests for a reorder condition. So what is a reorder condition? A reorder condition happens when the quantity on hand falls below the reorder point. And when it falls below the point, the system prepares a purchase order which is sent to the vendor and adds a record to the purchase order file. To signify that the item is on order and to prevent it from being reordered each time the computer application detects the same reorder condition, a computer-generated purchase order number is placed in the PO number field of the inventory record. Second one is the purchase order file. This file contains records of purchases placed with the suppliers. The record remains open until the inventory arrives. Placing the receiving report number in the dedicated field closes the record. Next is the purchase order line item file. The line item file contains a record of every item ordered. Since a single transaction can involve one or more products, each record in the purchase order file is associated with one or more records in this file. Have you noticed that the file contains a composite primary key, purchase order number, and item number? Both of these attributes are needed to uniquely define each record in the file. They also provide links to the related records in the purchase order and inventory files.
Then, we also have the receiving report file. A receiving report is used to document the contents of a delivery to a business. The following information is typically included on a receiving report: date and time on which the delivery was received, name of the shipping company that delivered the goods, name of each item received, quantity of each item received, the authorizing purchase order number if noted on the delivery documentation or box, and lastly, the conditions of the items received. This can be a negative entry where only damaged goods are noted. In a computer-operated environment, when the purchased products come from the supplier, they are counted and examined, and receiving documentation are made. Via terminal, the receiving clerk inputs information about the products received. Then the system automatically conducts the following tasks: increases the quantity on hand field in the inventory records, removes the reorder condition by resetting the PO number field to its normal blank state, creates a receiving report record of the event, and lastly closes the purchase order record by placing the receiving number in the designated field. Next, we also have the disbursement voucher file and check register file. A disbursement voucher is a form used to have a check made to pay an individual or an organization for merchandise sold or services rendered. On the other hand, check register is where you record all of the check and cash transaction your business has during an accounting period. Each payment day, the cash disbursement application selects items due to be paid and adds records to the check register file for each payment. It plants the items paid in the respective disbursement voucher records by entering the current date and the system-assigned check number into the appropriate fields. After that, the system generates checks that are mailed to the vendors. The file for disbursement voucher contains two critical pieces of information for the auditor. First, it is a record of the timing and amount of vendor invoices received. And second, at any point in time, the open items and paid vouchers in the field constitute the company's outstanding accounts payable balance. In addition, we will also discuss file preparation procedures or the process of handling files. The data in the previous files can be utilized to confirm or deny audit goals. The majority of the tests in the next section involve utilizing ACL to access and extract data from these files. Remember that each file must be described in terms of its physical location and structure from the previous chapter. The auditor defines the name of the file and where it resides on the mainframe or PC, using a series of easy-to-use pop-up menus. The auditor is then prompted by ACL to specify the file structure in terms of the length of each field, and then the data type that each field contains, such as numeric, character, or date. When the data definition is finished, the auditor assigns a unique name to it and saves it. Selecting the data definition from an ACL menu is all that is required for future file access. The auditor may inspect and edit the contents of the file since ACL automatically locates it and displays it on screen. Moreover, we proceed with testing the accuracy and completeness assertions. The audit procedures provided in this part establishes the accuracy and completeness of management assertions. As we saw in the last chapter, auditors frequently begin their substantive examination of details with an analytical review of account balances. Analytical procedures consist of evaluations of financial information through analysis of plausible relationship among both financial and non-financial data. It can identify relationship between accounts and risks that are not otherwise apparent. For example, in the case of an expenditure cycle, an analytical review can offer an overview of patterns in accounts payable and related costs. Comparing the current expenses to previous expenses and management budgets, it is possible. For instance, the auditor may compare the current payroll cost for the quarter to prior year's comparable figures. Unusual patterns or deviations should be noted and investigated to determine their cost. This procedure may result to the following. Firstly, analytical review may reveal patterns even in well-controlled businesses, prompting the auditor to conduct further substantive examination. On the other side, they can reassure the auditor that transactions and accounts are fairly presented and complete, allowing the auditor to limit substantive examinations.
So now, let us forward to review disbursement voucher for unusual trends and exceptions. The scanning of data files for unusual transactions and account balances is an effective audit procedure for identifying potential audit risk. For example, a company's accounts payable may show an abnormal dependence on a single supplier if the balances are excessively large. Even though there are a lot of vendors with small balances, this could indicate the need for business consolidation. Using the stratify and classify features of ACL, an audit can identify various characteristics associated with accounts payable procedures. Using this table shown in your screen, this will be the basis for having this result that is also shown in the screen. For further explanation, structuring financial data is done by using the stratify function. It is to group data into predetermined intervals, count the number of records in each interval, and accumulate a financial value for each interval. So for further explanation, this amount from the table will be counted as one record in this interval. So each record will be added depending on what interval do they belong. And then the total records will be counted and the amount of each interval will be accumulated as shown in the full amount. So for the next is the classify function. So we will be using the same table for the basis of our information. So in the classify function, it forms strata based on the non-financial or the non-numeric data. So in this example, this feature is used to group the vouchers by vendor number, and in this case also, the amount filled is accumulated. In the first report, it provides the auditor with a broad overview of the purchasing process. Just the 15% of the total business volume for the period is represented by 91% of all disbursement vouchers. So the second report shows the business activity of individual vendors. A single vendor account for more than 40% of the company's purchases, while the rest of the vendor received only a small percentage of the total business. So there is a possibility that these findings reflect a normal occurrence in business or that they point out to possible threats or risks. A company's unusual reliance on a single supplier may be harmful if a supplier raises prices or is unable to meet delivery deadlines. It is possible that this is the result of a fraudulent arrangement involving kickbacks paid to purchasing agents or other upper-level employees. So the fact that there are so many low-volume vendors indicates that the purchasing process is extremely inefficient. It is possible for the management to reduce the number of suppliers and increase the size of their orders in order to reduce the cost of orders placed. Additionally, the situation could be assigned to the auditor of an ineffective vendor procurement strategy. If an organization expects a significant amount of business, they are unlikely to add vendors to the file for control processes.
Moving on to reviewing for accurate invoice prices. Here, we will compare the prices written in supplier invoices to original purchase order prices to test the accuracy of the management assertion. Any clerical errors due to inability to verify supporting papers before authorizing payment, or accounts payable professionals abusing their authority in dealing with pricing differences could all contribute with significant price discrepancies. Traditionally, auditors use sample basis to compare invoice prices and purchase order to verify its accuracy. But through the use of ACL, it allows the auditor to compare the price charged on every invoice in every file for the period under review, through the use of joint feature, which involves a few simple steps. Let us take a closer look. As we can recall, when both files are being joined, it has to have a common key. Here in our example, the PO number is considered to be the common secondary key. That is why when you recognize both files in this field, you will be required to open each file separately. However, it will invoke the sort function of the ACL. We'll specify the sort field and will have to designate a file name to receive the sorted output. As a result, there will be two new files that is ordered with the same sequence. Next, the auditor will be required to combine the two files to create a third output that will be achieved through a join command. Actually, the relevant option is to create an output file that consists only of matched records from the two files. The fields that we need to verify the pricing accuracy of the purchased order file are the PO number and the PO amount. While on the part of the voucher disbursement file, we need the voucher number, amount, check, and the vendor number. That is why the structure of the combined PO disbursement file would be this one. At this point, the resulting file might be quite large, which make it hard for the auditor to scan the file for price differentiation time, which is time-consuming and ineffective. However, this will be addressed using the expression builder feature of the ACL. This feature allows the auditor to easily create a filter that will select only those records with unequal amounts. For the next part, we will discuss testing the completeness, existence, and right and obligations assumptions. We all know that the event that a liability arises is when the inventories are received from the suppliers due to an authorized purchase order. Further, this liability is recognized as an accounts payable once there is already a receipt of supplier's invoice. Although normally, the time lag between liability realization and recognition does not impact financial reporting, it will become an issue at the end of the reporting period, and it will require a special kind of attention. Moreover, we are all aware that the inventory received at the end of the audit period, but with a related invoice not received until the beginning of the next period, may not be included in accounts payable. As a result, it is important for management to establish system when it comes to identifying invoices received in a subsequent period that pertain to the audit period and adjusting obligations accordingly. The search for unrecorded liabilities provides evidence that tests the completeness, existence, and rights and obligations assertions, and it includes two simple steps. First, the two files being joined need to be ordered on a common key using the PO number. Then, you have to join the two files to create a combined output file, but this time, the relevant option is to create an output file that consists only of the unmatched records from the primary file. If the output file contains any records, the auditor needs to review this information with the management to determine if the appropriate adjustments were made to the accounts payable balance.
Searching for unrecorded liabilities. The disbursement voucher and receiving report files are used to look for unrecorded obligations as shown in Table 10.5. Each inventory receipt record in the inventory report file for the period should correlate to a matching record in the disbursement voucher file. Again, the join function may be used to compare the two files for the presence of mismatched entries. As in the last example, the two files are being connected must be sorted on a common key, which is once again PO number. Because the disbursement voucher file was already sorted on this key, the sorted output file may also be utilized for this test. As a result, just the receiving report file must be organized. The next step is to merge the two files into a single output file. The output choice, however, differs from the preceding example. In this scenario, the important choice is to generate an output file that contains only mismatched records from the primary file. The receiving report file is the major file in this case, while the disbursement voucher file is the secondary one. When you select this option, the joint procedure will discard all inventory receipts that were appropriately recorded as liabilities. The new output file will only contain the unmatched receiving report records. The file has same structure as the receiving report file in Table 10.5. If there are any records in the output file, the auditor must analyze this information with management to see if the proper adjustments were made to the accounts payable balance. Searching for unauthorized disbursement vouchers. To address problems about inflated accounts payable, a modification of the previous test might be utilized. The previous test will create a file of vouchers for which the organization has no record of inventory receipt if the disbursement vouchers file is selected as the primary file and the receiving report file is selected as the secondary file. This might imply that the payments are accepted purely on the basis of receiving a supplier's invoice rather than also confirming that stocks were purchased and received. Unsupported disbursement vouchers may indicate a fraud attempt or a lack of control in which several payments are made for the same product. Review for multiple checks to vendors, multiple payments to suppliers for the same item have been estimated to cost corporations hundreds of millions of dollars each year. Duplicate payments are typically caused by malfunctioning computer programs, data input mistakes, and the failure of permission measures. However, they are sometimes the consequence of dishonest suppliers attempting to avoid internal procedures by providing two suppliers' invoices with different invoice numbers for the same purchase. To separate them, they may issue numerous copies of the same invoice or simply append a letter after one of the invoice numbers. Using ACL's duplicate function, the auditor may search for duplicate records in a huge file. This approach is shown in Table 10.5 using the disbursement voucher file. To check for duplicate records, many fields or combination of fields can be employed. However, in order to draw meaningful inferences from the test findings, the auditor must first comprehend the link between the files. In our example, each disbursement voucher is provided in payment of a single supplier invoice, and each supplier invoice is associated with a single purchase order. Recognizing this link, the auditor might infer that the identical PO number value should not be found in two or more records in the disbursement voucher file. Figure 10.13 is the result of a search for duplicate records in the file. According to the report, two documents, voucher numbers 10392 and 10393, have the identical purchase order number. The reason of this circumstance will need to be investigated further in the cooperation with the relevant management. The answer might be as simple as vouchers being produced in error, invalidated, and resubmitted. However, the data might indicate that checks were issued for the identical item on two separate dates. The anomaly might be the result of a computer malfunction or an issue with internal controls during the voucher approval process, or it could be the consequence of fraud. Auditing payroll and related accounts. Analytic processes and assessments of the cash disbursement made in the subsequent period are used to test accumulated payroll and associated accounts for completeness and correctness. The auditor should validate the mathematical correctness of payroll summaries and trace totals back to payroll records and general ledger accounts. The current period's average compensation per employee can be compared to the prior year's averages. The Stratify tool in ACL can assist auditors in detecting strange trends and anomalous balances in payroll files. However, substantive examinations of details are often not undertaken on payroll expenditure accounts until analytical processes or significant flaws in internal controls suggest the need for extra testing.